Someone else who will be at the Mining Indaba to talk about all things gold and maybe platinum too is Jeffrey Christian, Managing Partner at CPM Group. Good to have you with us today,
it's good
as
to
always.
Be here.
So you'll be taking part in obviously being one of the keynote speakers next week at the Mining Indaba. And on your agenda, on your list, what is it that hopefully investors and CEOs and all other stakeholders will be able to take away from your talk next week?
Well, I'm going to be on one of the panels that Jonathan mentioned, and I think the two areas that we're focusing on is really, what's the outlook for gold primarily, maybe some of the other metals too, but also the outlook for the environment for foreign direct investment in African countries. How's that going? What are the prospects? What are the limitations, and topics related to that.
How is that going? We know that we recently had one of our regulations taken back to Parliament. Are you concerned about the rate of transformation and policy structure in South Africa?
I'm concerned about the rate of transformation around the world. I mean, we have seen a backwash in bad legislation in a number of countries globally, including the United States, Mexico, and Canada, and it is a problem. And it's a problem maybe to a lesser extent in South Africa than it is to other places. So that to some extent it may be that South Africa is benefiting. There are investors who have perceptions about South Africa that are negative, but there are a lot of people around the world who understand that South Africa has tremendous advantages compared to other jurisdictions.
Are we capitalizing on them? Because what you've just said comes as a surprise to me, and I think you saw my expression.
Yes, I think that South Africa could do a much better job capitalizing on what's going on. I think some of the companies already are doing so. I'm not sure that I'm sure that a lot more could be done. Jonathan said it brilliantly before when you asked him about the outlook in 2015, and he said it's going to be very mixed. And you're seeing that mix at every level. So you have to, it's become a market, mining, that is now a rifle market as opposed to a shotgun market. There are mixtures between and among the metals. Platinum might look better than gold actually in the next couple years. Gold might look better than platinum in the longer run. There are very big distinctions emerging among mining companies. The stringencies of the last 5 years have separated a lot of wheat from chaff. And there are some companies that have done remarkable jobs in restructuring themselves and repositioning themselves to be very profitable in a lower price environment. There are other companies that haven't been doing that. And then it's true on a governmental level. We did a lot of work in the 90s with the United Nations, in the 80s and 90s with the United Nations and the World Bank on the legal and regulatory environment that attracts or distracts foreign direct investment into natural resources. And we're seeing now, after about 10, 12 years in which people were paying less attention to that because of the bull market, you're now seeing people revisiting that and dusting off those old reports and saying, what do we really need to do to be competitive on a global basis?
Are CEOs responding to this message then clearly?
Some of them are responding very clearly, and we've been very pleased with some of the companies, and I think it's been reflecting in their share price. It's been reflected in investors buying into them. There are some companies that have done a remarkably good job in a very hostile environment to put their companies on a much stronger footing. And I don't know that the markets fully appreciate that yet. I think over the course of 2015, as quarterly results are released, people will be reevaluating their thoughts on mining as a potentially very attractive sector in which to invest.
But this is surely for the long term.
I tend to deal with long-term investors.
Okay, we're happy to hear about that, because we also picked up that obviously traders obviously like the volatile environment, especially when it comes to the gold price. Maybe if we can zone in there. Is it returning or gathering its shine once more?
You're reading my mind. Yeah. Well, the thing about gold is this. It's the investment demand that determines the price. 2/3 of investors are long-term investors. They don't invest in gold so much because of the price. Although when the price was 17, 18, 1900, they didn't buy as much. When the price came down to 12, 1300, they bought a lot. And you saw an enormous amount of gold, 80 million ounces gross purchases by investors in 2013, the year when prices fell. 2/3 of those investors invest in gold for the long term because they're worried about political environment, the economic outlook, and financial market stability. The other third are the shorter term guys. And you saw from 2005 to 2011, both long-term and short-term investors pouring into the market. From 2012, 13, 14, you saw the short-term guys get out, drive the price down, and the long-term guys took advantage of building up stocks. Earlier this year, very interestingly, you have seen a massive rapid shift in the short-term investors' attitudes. And probably 80% of them are now playing gold on the long side and 20% on the short side. There are far fewer short-term investors willing to short gold now, and there are a lot more people who are rebuilding their long positions. That's good for gold in the long run. I wouldn't be surprised to see the gold price fall back, especially after the Lunar New Year on February 18th to 25th.
How far back and why?
Maybe 1,200, simply because it maybe has gotten a little bit ahead of itself, and there are a lot of intervening economic factors that are still not necessarily positive for gold. Lower oil prices, for example.
What about the stimulus that we're seeing from the likes of the ECB and the volatility around central banks and the policies that they're trying to push through? Some say that has worked for gold.
I think that the ECB monetary accommodation will have a very minor short-term positive effect on gold, but from a longer-term perspective, it's part of a situation across monetary authorities and around the world that is long-term positive for gold, because it is indicative of these long-term economic and political problems that have yet to be addressed in most parts of the world. So I think it's positive. One of the top themes that we have for 2015 is greater volatility across all financial markets. And when you have greater volatility, it reflects greater uncertainty on the part of investors, and it also contributes to even more uncertainty on the part of investors. And when you see that kind of uncertainty, some investors park some of their assets in gold.
Platinum, could we see a particular reaction on that one?
I think platinum and palladium look very good. They have strong fundamentals. You have seen stable liquidation for several years. People who had bought platinum 2000 to 2007, they did very well. The price was rising. They got spooked and tired of the volatility and the bad information circulating in the platinum market. 2012, 13, 14, they've been net sellers, and that has pushed the platinum price down. That's the sole reason why platinum prices are $1,200 today when they were $1,900 in 2010. And the question is, how much of that selling is now already in the market, behind the market? How much residual stable liquidation is to come? And our view is that probably most of it's already in the market, but it probably will put a cap on platinum prices in the near term.
Just to close off with, if I'm a chief executive of either a gold mining or a platinum mining firm, how should I react appropriately to the information that you've just alluded to now?
Well, I think you need to pay attention to costs, which producers have learned the hard way. You need to pay attention to the jurisdictional issues, but you also need to pay attention to the fact that you are, in fact, selling a product. So oftentimes mining companies don't necessarily understand the financial aspects of the markets that their products are sold into, much less the actual sales.
Thank you so much for your time today and updating us on the commodity cycle. All the best for the Mining Indaba next week. That was Jeffrey Christian, Managing Partner at CPM Group.